Please join me in prayer as our Father and Lord and Savior taught us. Our Father, who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done, on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive those who trespass against us. And lead us not into temptation, but deliver us from evil. For thine is the kingdom, and the power, and the glory forever. Amen. I pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to thee, Texas, one state, under God, one and indivisible. Thank you. I will open the floor to any citizens' comments. With there being none, I will go ahead and turn the floor over to, I'm going to turn it over to our city manager and our city finance director for introduction of our committee and the presentation.
Go ahead.
Okay. And we're going to ask you all to come in. Yes. We have a new audit firm that we did hire for the audit for the fiscal year 2020. It's Devan Carter. I've been working with Robert Carter Jr. throughout the whole process, and he has brought his partner, which is Robert Carter Senior.
Thank you so much, Julie.
Sure. So, do you want to just present that?
Yeah. What you have in front of you, the audit is two. There's a small letter in front of it, and then there's the actual financial statements. The letter is a report on conduct of the audit, and it just gives a bird's eye view of how the audit was conducted, and it gives like a narrative overview of what we encountered. This communication starts on page number 1, and it's something that the AICPA thought was a pretty good idea as far as letting the audit committee know an overview of what transpired. And one of the things that we've mentioned is number 1 is that our responsibility is that we're a third party. These financial statements are put together by your staff, and you make your plans and your financial prognostications based upon these financial information that's provided by your staff. Then we are outside independent people that come in, accountants, CPAs, who come in and look at it from a third party view to make sure that these are presented in accordance with financial statements conventions that are normally used for local governments. That's what we do. And it is part of our audit. We look at your internal controls, and we establish what our audit program is going to be based upon your internal controls, and we prepare our audit program based upon that. So as a result, you get our audit opinion, which is included in your overall financial statements, and those financial statements are considered. There are actually 3 parts of them. One is your overall government-wide financial statements, and those are the full accrual basis. Then you have your fund accounting statements. Those are the ones that your staff works with on a day-to-day basis. You have your disclosure notes indicating how these statements were put together. Then there's a federal section for any federal awards that you have. And those are the items that comprise this whole big package. And this is what we're reporting on. Now, that covers 1, and 2 is the planned scope of our audit was to do a regular audit as required under state law of your financial statements, and that's what we did. Number 3, was there any significant accounting policies that you should be aware of? And there was none that sticks out. You follow the policies that are supposed to be done by a local government. On page 2, you have judgments, and accounting estimates. And we just wanted to point out to you that as far as your fixed assets, which are primarily in your utilities fund, depreciation is all it is spreading out the cost over the useful lives of the assets. And those useful lives usually range anywhere from 10 to 40 years, depending on the nature of the assets. And we look at that and see if those estimated useful lives are in accordance with useful lives for the same type of entity, for the same type of fixed assets, and they are. But it's still an estimated amount. So if you have 40 years, you might actually get a 50 years, but you use 40 years, you take, let's say, a building that was constructed for $500,000, and you spread the cost over 40 years, and that's all that is. And that's where we're indicating that is based upon an estimated useful life of the asset. Investments, we didn't have too many of them, and so certain things with bond discounts. Now allowance, the fourth one, is something that you do for uncollectible taxes, and we look at your historical collection experience, and we make sure that you have an allowance so that you can see something that says, well, let's say of $100 that we have coming to us, based upon our past collection experiences, we should be able to get $90 of that. And the other $10 may be resulting in additional collection procedures over and above that you normally have. So that's an allowance that you have, and that allows you to plan your cash flow from what you're going to get. For instance, if you have property taxes, you have an allowance submitted in there, and you say, net of the allowance, that's what we expect to have in cash to cover our operating expenses. And those are the items that you do have some judgment on. Number 5 is any adopted or unadopted adjustments. As we go to the audit and we find that there are certain adjustments that have to be made, we discuss them with your finance staff, and they appoint them. So there's any adjustments that we came up with, they have adopted. So there's none that are unadopted. Number 6, other information. The only information that's included in these financial statements is the report on our audit in accordance with government audit standards, and that's going to be towards the back of the book. Now, there's 2 types of audits for federal awards. There's one called a single audit, and that you have to have individual amounts over $750,000. And then you have amounts that are underneath that amount that are covered by federal standards. So that's what we used. You did not have any major items this year, any major grant awards that are over $750,000. Okay, and then disagreements with city administration, we had none. That was the bottom on page number 2. And if you go to page number 3, consultations with other accountants on any matters that we came across that were more extraordinary, and we didn't find anything like that, so we didn't have to do that. Was there any matters that we discussed with city staff prior to appointment? There was none, other than just general questions about your financial situation in order for us to evaluate it. And then number 10, there's what they call city representation. What we'll do is that towards the end of an audit is we normally have a representation letter where they will say, yes, we believe that we've told you everything there is to tell you. Any questions you've asked us, we've answered to the best of our ability. We have no significant plans to get rid of any type of assets. All that is put in a representation letter that's then signed by your city manager and your executive person, and they give that to us. And that's what they call a representation letter. Then finally, is there any difficulties that we encountered in performing the audit? We didn't find any major difficulties. There were some items that needed to be addressed, but they were not difficult, so other than that. Now, the last one is compliance findings and other findings and issues. We did find where you did have an amount from a component unit that you picked up in the special resolution where you went ahead and you set up an allowance for it. And what an allowance does is a saying that, okay, we're not going to recognize any income from that receivable until you actually get it. So we're not going to make any plans. That's not going to include it in our budget until we actually get it. And that's what allowance is. So you are being very conservative and saying this amount, we're not going to pick it up as income until we actually get it under the circumstances. So that's what you did, and that's the proper and conservative thing to do. And we wholeheartedly agree with it, and you had picked that up. That's the amount that we show in there as far as an allowance.
There is an additional item on the city's bank accounts, and this is more a comment, not a finding. When we basically get confirmations from the third-party banks to confirm your bank balances, and we also ask them if they basically pledge collateral on behalf of the city. And so in this case, I think the biggest bank is the Wells Fargo Bank. And so they did pledge up to a little over $1 million, but you got more than $2 million in the bank. So technically you're under collateralized by $1 million. So I already talked to Cindy about it, and what you have to do is basically go back to the bank and tell them, part of our depository agreement is I want you to pledge enough securities to cover any, because the FDIC only covers $250,000, and so the rest of it has to be pledged securities that they cover, just in case, again, just to secure your bank balances. So most times we find that as long as you just explain it and you're a substantial customer with the bank, they'll go ahead and do that and just tell them, look, we want to basically update our depository agreement to make sure you go, instead of $1 million in pledged securities, you go $2 million. Now, getting back to the finding, I just wanted to, so if just to explain that a little bit more as far as the issue is exceeding approved budgets. And so if you look at page 50, this is, I guess, what you're more accustomed to seeing when you're doing your budget workshops and you're looking at your line items, overall revenues and your expenditures, and you're trying to make assessments as far as what kind of appropriations you're going to make for the year based on your revenues. If you look at page 50, there in the final column is what you call your final appropriations under the budgeted amounts. And if you look at that general government and administration, you had appropriated $1.2 million, but it actually came out to $2.8 million. So that's a negative $1.5 million. Now again, $1.1 million of that was basically you went ahead and reserved the allowance for that. What happened was last year in 4A, they had it as an interfund, and you can't have as a third-party component unit. It can't be an interfund, so it should have been classified as a receivable. So once you classify it as a receivable, that's what Robert Senior was talking about, is that you have to value that receivable, and so if it's not a good receivable, then you have to reserve so much amount. And you guys took the right approach. You took a very conservative approach, and you reserved all of it, which is $1.1 million. So that's why you're seeing that hit in that line item, and consequently that's making a pretty big variance there. But there again, you guys did it because it was the right move, and you want to be transparent in your financials, and you actually want to show what these financials are valued at. You have to be realistic as far as, again, when the budget process comes around, it's like, well, look, what can we really do, and what are really looking at as far as our revenues, and how should we, basically allocate our expenditure. So again, that's something that it was a little unforeseen because you look at the final budget, but this obviously came after the final budget. We did that back in June, so obviously it almost been a complete year before you. So it was kind of hard to anticipate that. As far as like the public safety line item, $1.7 million was what you appropriated, and you came in a little over $2 million, so that was about a negative $265,000 on that line item. And then lastly, on the parks, it was $353,000 in your final. And then the actual came in at $378,000, so that's that negative $25,000. So when you go back and look at that finding on page 54, the $1.8 million we're talking about is basically those three deficits. And so, basically it's finding because the city statutorily is not allowed to exceed the council's approved appropriations in the general fund's budget. So that's why we consider it to still be a finding. Now, if you look at the page before, on page 53, which is a schedule of prior year findings, these are all the ones from last year. And as you can see, there was quite a few of them. There was over 9 findings. And the fact that you were able to, you basically resolved all of them in this fiscal year 2020, with the exception of that, the exceeding appropriate budget. So the fact that you're able to do that and resolve them is quite an accomplishment. And I want to commend the city staff here for taking the initiative to really timely response, because a lot of times we'll come across and see these problems and they're going to be basically chronic problems that are going to continue. And unless somebody comes in that really knows what they're doing and they really want to be responsible for what they're doing, that's what in fact Cindy has done, because these were a lot of little issues here involved, and that didn't need to be here. I mean, as long as you had the right controls in place. And per our evaluation this year, like I said, we didn't find any issues with any of these areas. So the fact that you just had the budgets, to me, again, I commend the city staff for doing that, because that's quite an accomplishment. It was a very, very timely, pretty timely turnaround.
If I may interject a little bit of background on internal controls. What internal controls are just cross-checks that you have implemented to make sure that if there's any errors that occur in your financial statements, you'll pick them up in a timely basis and get them corrected. And that's what internal controls are. It's just a matter to make sure that the information you get is timely and correct. And you have procedures to double check to make sure that this information is being double checked on a timely basis. And if there's any errors that you find that could occur, they're corrected on a timely basis, and that's what an internal control is. The only issue that we had left outstanding was the situation with the differences in the budget. You are required to have a comparison between your original budget and your final expenditures. And sometimes things happen that are unforeseen, that you have to make adjustments to your budget for unforeseen circumstances. And what happens with this one is you reevaluated the collectability of that amount, and you took the more conservative approach by considering that as an allowance, and we're not going to make any plans from any of that money until you actually get it. That's what allowance is done. And that's really being conservative, and we commend you for that.
Well, so going forward, basically the way you resolve that is when you finally come up with your budgets, and let's say sometime during the year you're going to have to amend it. Just make sure to amend the final budget to match the actual expenditure, and that'll resolve the problem. So, and like I said, Cindy's pretty much on top of that, so I doubt that's going to be an issue going forward. So getting to the actual opinion and the audit report, which is on page 2. On the top of page 2 is that paragraph, the opinion. So, it's a lot of technical verbiage, from an auditor standpoint, but basically it's what we call a clean opinion. The financial statements are fairly stated in accordance with U.S. accounting principles. We didn't have any exceptions. You took the appropriate measures to remove all the items that would have been exceptions, so it's a clean opinion for this year. Now, as far as that substantial doubt paragraph, it hasn't remained because technically the auditors from last year had dated their report August 26th, so that's within 12 months of this year. So consequently, you weren't able to implement your turnaround policies and the zero-based policies in the fiscal year 20's budget, because the whole budget process was basically happening before this audit was released from last year. So consequently, it didn't impact 20's audit, but in 21, you're going to take the necessary measures, and that paragraph should go away. You shouldn't have that paragraph any longer. On page 10 is your consolidated balance sheet. On the far right column are your total expenses. So I'm gonna just go over some of these highlights in these columns, and these these line items. For fiscal year 2020, your total assets were $32,201,000, which primarily consists of your cash of $2.9 million, your receivables, that's your taxes, your utility receivables, your trade receivables, other government receivables. Those add to about $1,399,000. And the rest of it is your fixed assets, which is around $27,707,000 net of the depreciation. That's what mainly your assets consist of. There's also a category called deferred outflows, which is more or less like a prepayment, which is like another asset, and that is related to the pension plan. And that was $296,000. Now, why we have to create that category is the pension plan is dated as their fiscal year is in December. So there's a measurement difference between 9/30 and December. So what they do is they take basically their value is at December, and so to get it to make it to basically get the true value as September, we have to create these accruals or accruals either positive or negative. So you're going to see that language, and it's just an accounting language, just to let you know that's more or less what it is, a prepayment, the deferred outflow related to the pension plan. Your total liabilities were $20,406,000, and which primarily consist of payables. If you look at those payables, you have your accounts payables, salary payables, compensated absences, claims and judgments. Those total around $1 million. Your long-term debt, which is your bonds and notes, that's around $18,313,000. And then the pension liability there is $1,037,000. And that's the pension, the value as of 9/30. The way we trued it up. Under deferred inflows, that's again an additional accrual to the pension plan, and that was $553,000. That makes up basically the difference for the year in what you would have been contributing to the pension plan to get it to a 9/30 balance. So when you add your assets and the outflows against your liabilities and your inflows, you have what you call a category of net position, your equity. So your equity for the year was $12,310,000. Now on page 11 are the component units balance sheet. Now we didn't audit the Phelps. It's there just for presentation purposes. That's the co-op, the utility co-op. They have a separate audit that's done by them. So all we do is just basically list our numbers. Now we did audit the 4A and the EDC. And so under the 4A, total assets were $923,000. They did have a pension expense also because they have employees from the city. That was $12 million. Total liabilities were $2,023,000. Total deferred inflows were $26,000. And their net position, again, the net of those numbers was a deficit of $1,113,000. For the EDC, their total assets were $3,646,000. Their deferred outflows were $6,800. Their total liabilities were $2 million. Their deferred inflows, again related to the pension plan, were $24,000. And their net position was a positive $1,628,000. Okay, now on pages 12 and 13 is your consolidated income statement. And this is again on a government-wide basis, and this is what's what we consider accrual basis, which is required for auditing standards. So it's split up in several areas. So I'm going to go into the different areas here for you. Under the first column are the expenses. Under the total primary government, that's basically your government activities and your utility funds, your various utility funds. Total expenses were $11,560,000. One column over, there's the category program revenues. So for charges for services, you generated $6,428,000 in charges for services. You had operating grants and revenues of $281,000. You had capital grants of $271,000. On the far right column, in the middle of the page, is a category called general revenues. Total general revenues and transfers were $5,340,000. That primarily consists of your property taxes of $1,412,000, your sales taxes of $2,334,000, and your franchise taxes of $851,000. So when you apply the expenses against the program revenues and your general revenues, you actually had they call it a change in that position. That's a surplus of $861,000 for the year. Again, this is on a full accrual basis. It's a little different than when you look at the modified accrual basis, what you do for budget purposes. There's basically different reconciliations involved to get to this level. You basically, on your modified accrual basis, you don't pick up your assets and the depreciation expense, and also you also on the long-term debt side, that goes as when you ever make your principal payments, that goes as a positive against, and usually it's an expense on the modified accrual basis. So that again is what your full accrual basis looks like. Now on page 13 is the remainder for the component units, the 4A and the EDC. And so that's under the component units. On page 12, again on the far left column, if you look at the expenses, Floresville 4A had $878,000. Under program revenues, they had $82,000 in program revenues, and that's mainly the rents that they get for this facility. If you look far off to the right, on page 13, under the general revenues again, their total general revenues and transfers were $563,000, and that mainly consists of the sales tax money they get, which is the allocated sales tax they get of $466,000. So again, when you apply the expenses and the program revenues against the general revenues, they had a deficit of the year for $232,000. For the EDC, they had, again on the far left column, $818,000 in expenses. Now they didn't have any program revenues. On page 13, under general revenues, they did have $937,000 in general revenues. Again, $933,000 is sales tax revenue, which again is their allocation from what's appropriated from the city sales tax. So their net change in position was actually a surplus of $118,000. Now that pretty much concludes the presentation from financial statement. The rest of the report basically supports these numbers. I'm open to any questions you guys have.
Well, I've got to say, I am very impressed because I've been the mayor for 4 years, and this is probably not perfect, but this is one of the best audits we have had. And so, Cindy, can you kind of explain to us some of the things that you corrected with the auditors and how we went forward with this? I mean, I know we're not out of the woods, and I know we've got some work ahead of us, but how do you foresee this going forward?
Especially correcting the 9 deficits.
Yes, from day one that I started, it was in the middle of last year's audit. So what I did is once that was completed, I actually went through each item I had to correct from last year and reviewed everything for this audit for 2020 and made numerous corrections. A lot of work. So that way we wouldn't have these findings, and corrected and worked. Also, I educated Christina and Evelyn both on items, so they're aware now of why they're doing things. We have processes, reviews. They're catching things now firsthand before I even see things. There's more of a connection now in understanding the whys and processes, and just understanding accounting. So once they got here, they didn't find those errors from last year. But what I did find is we implemented processes, so that way it's not a continuing error that I'm having to go back and correct.
And Mr. Johnson, I know you kind of came in the middle of all of this, and I know you've been working hard with it. Do you see anything that we as a council can help with audits or going forward with this year's budget?
No, ma'am. We appreciate the council, as always, the mayor and the council in general. I'm excited to see the end result. Whenever you get new auditors, a new set of eyes coming in to look at your finances, it's always an issue that's scary. Most of the time, it heads in the wrong direction because they find things and we have to correct them as we go. This has been an extremely good working relationship between the auditors. Like the finance director said, many of the issues were corrected because we just couldn't let that go anymore. She wouldn't allow it, and I wouldn't allow it as far as staff goes. One of the final things that we had, of course, was a 4A agreement that we drafted. We worked with bond counsel, we worked with the auditors to implement that. So that's gonna take us where we need to go. We do not hide things. We bring them up, and we said we're gonna address those together, the finance department, myself, and city council, to ensure that our next audit next year with this fine firm is in the same direction, the positive. So all we need from you, as always, is support, and to know that the experience that the finance director has brought on board complements the experience that I have brought back to the city from working with the city of Alice as their finance director. We bounce ideas off ourselves, and then we incorporate and utilize the staff that we have. They're very capable. It just seems that they were never really included fully to understand what was going on. You know, they know everything that we know, because we're not trying to segregate duties. They have their own duties, but we incorporate it as a group to ensure that we tackle everything that we need to. So our goal for next year is to improve on what we've got, and make sure that we start addressing the deficit that we've got. It's on paper, but we will continue to work on that. So we appreciate your support, and that's all that we look for.
Well, thank you. And this is just a question that I have, is with the auditors. I know you gave us a wonderful presentation. Is there any other suggestions or that we might take as a council and staff going forward to get even better with next year's audit?
I may interject. Our firm has been around since 1975. We have been primarily involved in audits of local governments. We've seen a lot of things evolve over the years. Like for instance, your overall financial statements, those are on an accrual basis. That was something that was brought up almost 25 years ago in GASB 34. We mentioned that. And when we say GASB 34, that's the accounting standards that are put up by the governmental auditing standards board, and they issue a lot of pronouncements, and a lot of these are that they're trying to bring you in line with other entities that have it on an accrual basis. So by law, you have to run your funds in a special manner, because that's required under state law. So that these overall government-wide financial statements supplement that, and those are picked up on an accrual basis, so you can better evaluate them. Now, one of the things that you had that was an issue was on the continuing situation as far as the money that was owed to you from the component units. And you've gone ahead and done something about that, and hopefully that'll disappear in your next audit. You won't have that. And then also taking care of all those internal control issues that you have taken care of. So to us, internal controls are very important, because if you don't have any internal controls, there may be some major mistakes that occur, and people do not detect them in a timely manner. So internal controls are very important, and that's what guides us in our audits also, to say what's the likelihood that you're going to have errors on this balance or that balance, and the likelihood is based upon internal controls, that you double check items to make sure that if there's any errors, you catch them on a timely basis and you get them corrected in a timely basis. And that's what internal controls are. That information comes to the council, and you have to make decisions based upon those informations. So you're saying, well, you're basing your decisions on figures that are timely and then complete and correct. And that's what you're trying to get. And as our role as third parties is that we're coming in as a third parties we're completely independent, and to see how you all are doing on it. And that's an important part of your fiscal management, is having a third party come in there and look at it. And the most important thing you've done is you've taken care of those internal control deficiencies that were included in the prior year, And also, you've gone ahead and looked at that big receivable, and you picked up an allowance for that. And we said, we're not gonna make any plans for that until we actually get it. That's when allowance is. So from that standpoint, you've done quite a lot of straightening up in issues as far as.
In addition to
plans.
that funding agreement, that basically, there wasn't a clear funding arrangement, there was apparently, from years back from 2008, there really wasn't a formal agreement between you and 4A. And so with that funding agreement spells out the conditions, and they know exactly what they're responsible for. And going forward, there's, basically that stops the bleeding on that, because from year to year to year, all you were doing, basically was just covering their deficits. Now that they're aware, this is what we expect from you, then at least that'll at least stop the bleeding, and you're not going to accrue any more deficits from that standpoint. But going forward, that'll be that was something that, like I said, those were two of the bigger issues. The USDA also, going forward, we need to make sure that they are on top of whenever you issue new bonds. In the past, I think the old finance director really hadn't been on top of all those draws. They were just accumulating, and they really have to keep control as far as those bond project costs, because this is grant money and this is federal money. And if you don't really show a good accounting of that money, there's going to be issues. So consequently, the fact that we all had to go back and reconcile those issues, there again, I commend Cindy, because she really took a lot of effort, to do that. And so going forward, as far as suggestions, I mean, I know you're going to adopt the budget pretty soon. What we want to do is make sure you close out the year in a timely basis and come in earlier, so that we can issue the financial statements a little bit quicker, and so you can see the results of what you're looking at a little bit quicker. So going forward, I mentioned to Cindy that once she's done with the budget process, we'll go back and make sure she's comfortable with all the adjustments, and then for the next fiscal year, we'll come in and make sure that we start the audit process a lot faster.
Thank you so much.
Sure.
Any questions?
Yeah, and the way you've managed a lot of the accounts, Cindy, like, and I don't know if I should say like separate this, separate that, that has really helped you, hasn't it? I mean, as far as,
I feel being just transparent, just following your accounting rules. I don't, just basic accounting.
well, put certain accounts where they belong instead of
It's just
the way it was.
coding it correctly.
Exactly.
making that
Exactly.
was
Once the accounting is clean,
Right.
you get a better
It's
picture
all
of what your balance sheet
Exactly,
looks
and I
like and
think she's
your
done
actual
a tremendous job on
position.
that
Yes,
for her
she has.
staff and
Yes,
Mr.
the
Johnson.
accounting was very clean.
Right. Well, I cannot say enough of, very encouraged by this. As like I said, this is probably the best audit as mayor I have seen, and thanks going out to everybody. That doesn't mean we got a lot of money to play with, because we
No.
have a
That's
lot
not right.
to take care of. And going forward, we don't know exactly what's going to happen with COVID, but COVID hit us at a bad time anyway.
Yeah.
And so, anyway, but I'm impressed. I'd like to go back and look at a little bit more of the numbers. Will be presented to the city council next Thursday, a week from
Okay.
today.
Yes.
And any other comments before we adjourn?
That's it.
Well, thank you to everyone. Thank you all for coming down today, and we look forward to next Thursday.
And again, thank you, staff, for what y'all have done. I'm just really happy about this today.